Hello everyone, hello traders. Yes, this time we're going to have a look at market insights, where I'm going to analyze the charts, the way I trade it, to you guys to know and understand how I go about trading the markets with the strategy that I use. So without much ado, I'll go straight into the charts and then begin from there. We look at a number of instruments where we can implement the strategy to see what can be realized out of it, or what can be um, how you can extract money with the strategy from the markets every day, every month, every week. It doesn't matter which type of trader you are, whether you're a swing trader or you are a day trader. This strategy works perfectly all across the board on every instrument. Any instrument you want to trade, the strategy works on it. So without much ado, I will just go straight into the charts, and then we'll have a look at some different instruments that we can make use of. So over here I have BTC USD. And it's on the weekly time frame. So if you are a swing trader, perhaps you're going to start from the monthly, using a top-down approach to analyze the charts. So on the monthly, we can see price has gotten to these previous highs where it's turned around. So let's see, let me put a horizontal line here. So it's exactly where it got to before, and then on reaching there it began pulling back. So from this point on, it could either continue going up, or, as this has been in a straight kind of vertical upward trend, there's a high probability that price will pull back to the moving average, to the 20 moving average or the 50. As it looks now, price is in the wide state. So once it separates itself from the moving average, it always finds a way to come back to the moving average. So from this point on, there's a high probability that it might start selling or taking some rest after this long run up until here. So okay, before I continue with this, I will quickly go through what I use in trading this market. So if I'll go on a smaller time frame so that I'll have all the, because of I'm on the higher time frame. This is a monthly chart, so the 200 moving average is not showing because there's not enough data to calculate the average for the 200 moving line. Okay, so I'll go on a smaller time frame. My trading time frame is the 2 minutes. The 2 minutes time frame. So as I said, I'm just going to go through this, how I look at the market. So the market does this one thing. It moves from a narrow state into a wide state, then back to a narrow state again, So the same thing happens in a downtrend. So from the narrow states goes to the wide states, then back to the narrow state again. So this is a perfect picture I've drawn here. So it might not look as clean as I've drawn it here, but this is how it happens in the market. So I'm going to show you as I go through it later on. So here, where we have a price, we have the moving averages all in this area. So this is what I'm referring to as the narrow states. The narrow states. And then on its way up, it also creates another state of the market where it's also called the neutral states. Neutral states. So this is neutral states, this is narrow states, even though they all looks to be the same. This is narrow states because everything is together here before it's made its way up. So this becomes, the top here becomes the wide states. The wide state of the market. So once price gets to the wide state of the market, it always finds its way back to the narrow states. So on the narrow states, from the wide state, we come to the neutral state again. We come to the neutral state again before it make its way back to the narrow states once again. The cycle continues. So this is the same cycle the market goes through each time. Just like we have recession in the economy where things begins to fall apart or things squeeze up, and then there will be a time that it will expand again. So from that time of recession to the time of expansion where everything begins to blossom and then move as it should be. So in the same way, this is an upward trend, and so from the narrow states, price can decide to go whichever, whether going upward, making an upward move or making a downward move, which is not an issue to us, because as from this state or this area, where we also refer it as the consolidation zone or the trading range, where you find price moving up and down in this area before either pops up or pop down. Pop down like that. So here, if you get a setup for the upward trend, then you join it from this area. This is the ideal place you can look out for a setup going up. And once it gets to the wide states, if you get a setup from there as well, coming down back to the narrow states. Okay, so with that said, I will go on and look at the charts with this explanation. Look at the charts with this explanation. So before I do that, I'm going to take the price off the chart, just remaining the moving averages that I'm using. Okay, so this is what I was talking about. So in an upward trend, you will find that the narrow states and the wide state will be in a slope, in an upward slope. In the same way, when it's in a downward trend, you will find that price will be sloping or moving down, making its way down. So you find the moving average also in a kind of slope going down. So over here, the blue line, which is the 20 moving average, I have the 20 moving average here that I've overlaid on the price, but at the moment I've the price off. So I want us to follow these blue lines with our eyes carefully. So this blue line, that's what we are using to refer or to identify which states of the market it is in. And this blue line is 20 moving average. 20 moving average. And the yellow line we see here is 50 moving average. 50 moving average. And then the last one is the 200 moving average. So at this point in time here, at this point in time, over here, this is the narrow states I'm talking about. Oops, that's too big for what I want to use it for. Okay, so this is the narrow states. So before the narrow states, you could see price was in a range going up and down, or it was in a trading range. So over here, when you have something like this, you adapt a different strategy. You adapt a trading range strategy, and then once the moves begins, there's some other strategy you can use, which I'm going to go through with you. So now, as I said, just follow the blue line. So this is the narrow states. So from this narrow states, price moved to the wide states and then began to come back to the narrow state again. So from this narrow state again, it began its journey, the next journey again, to the wide states, and then pulled back to form the narrow state again. So that, as I said, price go through this cycle over and over again. It doesn't do anything else. If it's in an upward trend, that's what it does. If it's in a downward trend, that is what happens. So all you have to do is to follow what price is doing. So this is purely price action trading. So you just have to follow what price is doing in relation to the blue line, in relation to the 20 moving average. So with that said, if the 20 moving average is moving up, we are only looking for buys. We are only looking to go long. If it's moving up, that's what we also refer to. It is in a bull market. It's in a bull market. If it's going down, it is in a bear market. So if it's the blue line is going down, it's sloping downwards, you only look for sells or you go short in the market. So currently we have an upward trend. We have an upward trend. So as we can see here, I've left out the candlesticks. I'll overlay it shortly. So as we can see here, this is the blue line, this is the yellow line. So the job of this yellow line here is whenever the blue line cross above it, we expect price to pull back to the moving average. So price will be somewhere around this area. Once I lay it, you will see what I'm talking about. So whenever there's a crossover of these two moving average, the 20 and the 50, price pulls back to the moving average, and then from there we look out for an event, we look out for a setup to continue the upward trend. Again, I'm going to overlay the charts onto the moving average now so that you understand what I am getting at. Okay, so this is price on the charts now, as you can see. So over here we had the crossover. The crossover happened here. I'm talking about the crossover of the 20 moving average over the 50 moving average. So we had the first pullback here, another pullback happened here, then another one continued. So over here we had about 3 after the crossover. Sometimes you only have about 1 or 2 before price gets to the wide state and starts coming down. So over here, this is where you look out for an event to take a trade, the narrow state. So before all this starts, you look out to enter a trade here. You look out to enter a trade here. So what you will be looking out for is the last purple candle being taken out by the green candle, which we refer to as engulfing. We can see this green candle engulfing the purple one, the last purple candle. So once this happens, you are good to take a position in here, going up. If you're not okay, because how this works is, if price is above the 20 moving average, it's above the 200 and the 50, you look for buy opportunities going to the upside. So if at the moment price is below the 200, so if you're not comfortable taking your trade here, you can just wait as price gets above the 20, or with this big candle, with this big bull candle surging off the 200 moving average. That's a strong signal or strong pattern for you to enter the trade to the upside. So whenever we find a big enough candle coming off the 200 moving average, it's a high probability event or high probability opportunity to get into it. Other than that, you wait until you get a purple candle, which will be taken out or engulfed by a green candle. So price, this green and purple candles we see here, they are all above the 20 moving average. So this is also an area you look out to enter a trade, because you only want to take a trade when price is near the 20 moving average. So over here you can take a position. You can take a position here to the upside. Take a position here to the upside, or this would have been your initial entry. So if you entered on this candle, your stop loss goes below here. If you entered here, your stop loss goes below here, below this point. So once price keeps on moving to your direction, you can move your stop loss above. You can move your stop loss above your entry to break even. You can move your stop loss above your entry to break even. Let's see this. Okay. So you move your stop loss above your entry. So this is your stop loss here. You can move it above here just to protect your position in case price decide to turn back. Then you have already locked in this profit. You have already locked in this profit. So at this point in time, you will be in a risk-free trade. Then probably you leave it to run all to this wide state. So from this narrow state, as I described earlier on, price pushed until it got to this wide state. So from this wide state, it began pulling back. It formed a double top, or an M as we refer to it. Oops, that is stayed where it is. Yeah, so from this narrow state, price moved to the wide states over here, pulled back and formed an M before it began the actual back movements back into the narrow state. So it came back into the narrow state again. So from this narrow state again, it went back into the wide state. So in the narrow state, as I said, that's the ideal place to look out for trading opportunities. And then as it makes its way up, whenever we have another engulfing candle, price taking out the purple candle, this is in the bull markets, it's in an upward trend. So these purple candles here does not carry much weight in the upward trend. It carries much. The green one carries much weight as we are in the bull market or an upward trend. So we look out for price taking out the purple candle, or engulfing it. So once price engulfs the last purple candle we see here, you can take your entry here. So over here, this would have been your first entry, and this is where you add on to your trades. And as price moves and gets into the wide states, it's an area to look out for taking some profit. You can take part of your entries, part of your profits out, and leave some percentage in to continue running if you anticipate that the trend is going to go further up. Other than that, you can close your trade at the wide states, and then once price pulls back to the moving average and then gives you a setup there, you take it again and ride with it. So in the wide state, you take your profits. In the narrow state, you take your trades. So what makes it, what you can use to identify it being in a wide state or a narrow state is where we have price separating itself from the 20 moving average, creating some gap in between the 20 moving average and where price gets to. So we can see the gap here, we can see the space here. We can also see that there is space from here to the 200 moving average. There's space from the 20 to the 200 moving average. So when you spot this happening, price is in a wide state, and there's a higher probability that it will pull back to the narrow state. So one thing you can also look out for is whilst price is going up, if it goes up vertically, there's a high probability that it's going to pull back to close the gap. It's going to pull back to close the gap. Yeah, so that's one thing you can use to identify which state of the market you are in. Because guys, you need to understand the flow of price. Where is price coming from and where is it likely to follow through? So if it's in a narrow state, there's a high probability that it's either break going up or break going down, which is not a bother. What you look out for is if price make its way above the 20 moving average, then we are in an uptrend. If it's above the 200, above the 20 and the 50 moving average, you are looking going to be for buys, entries. The same way, if price gets below the 20 moving average and the 200 moving average as well as the 50, you'll be looking out for sell entries. I believe that is clear enough. So going back to what I was explaining earlier on about the crossovers. So this is where it crossed over after it came to this narrow state. This is where it crossed over. The blue 20 moving average crossed above the 50 moving average. So as I said earlier on, when this happens, we expect a pullback to the 20, or sometimes it comes in between the 20 and the 50 moving average, which also gives us a very good setup or area for entry. So when this pullback came here, so as it was moving up, there's a crossover here. We can see a crossover here, and then after this crossover, we have the understanding that price is more likely to pull back to the 20 moving average, or in between the 50 and the 20. So when this happens, you look out for an event where, or you look out for a setup where price, the last purple candle, is taken out by the green candle. Then you enter a trade, your stop loss goes here. You enter here, your stop loss goes here, and then you go in for the ride to the upside. So over here we had another entry here, stop loss here, then right to the upside. You could have added on to your position over here, then enjoy the ride to the upside. So one thing you should be also mindful as you do this is you keep your mind going, you keep your eyes going, and also identify which states has it gotten into now. So if you spot that it is in a wide state, you stop buying, because in the wide state, that is where you take out your profits and then look for maybe a possible sell, a counter trend sell, if you want to go for it. Other than that, you just look for the buy opportunities in an uptrend, and then you look for the sales opportunities in a downtrend. Because sometimes if you go do a counter trend trade in an uptrend, you could be caught up. If for instance the trend is very strong, you could be caught up, because once that happens in a strong uptrend, you most likely have just about 20% retracement or 25% retracement of the entire move up. When it began from the narrow states, you could only get about 25% retracement, then it will continue going up. So for instance, if you take a counter trade and then you are expecting more from that trade, you might not get it, and you could end up losing some money. So once price gets into the wide states and the uptrend is still on, most cases you will have price retracing about 25%. So if for instance we're considering this whole move up here, up here, and then you want to engage in a counter trend trade, so this probably will be halfway of the move up. I think that is a bit, let me go a little bit. So I'll say this is halfway of the move up, and this area happens to be 25%. So with this, if you get into a counter trend trade to the downside, as we are in an uptrend, what I'm saying is don't expect too much. So if the trend is still on, there's a high probability that price will come from here. Let me reduce this a little bit. Price will drop from here to this point and then continue, or it will drop from here to the 50% area and then continue. So if the trend is still strong, this is most likely what could happen. Other than that, if it's moving back to the narrow states, it might go close to where the 200 moving average is, close to it or touching it, or sometimes it goes a little bit below, just like we had here. So from this, it was coming from the wide states back to the narrow states. It went a little bit below the 200 moving average and then popped up again. So that is what I'm talking about. That's what I'm talking about here. So now, I believe I've given a clear picture of what I look out for when I'm trading. So we keep our eye on the 20 moving average to identify or to determine which direction we are going to trade. So if price is away from the 20 moving average, you don't take positions here. Only position you might, if you want to, but it's a bit risky, is position to come back to the 20 moving average. This is an upward trend, so ideally you look out for buy positions just to avoid you being caught up in a sell in a bull market. Okay, so we'll look out for an opposite. So this all buy until it turned around here. So here price got below the 200 moving average, got below the 20 moving average, and below the 50 moving average as well. So the crossover happened here, right at this point. Right at this point, we had a crossover here where the 20 moving average crossed below the 200 crossed below the 50 moving average. But at this point in time, I'm referring to the 20 and the 50. So whenever we have the 20 crossing below the 50 moving average, we expect a pullback to the moving averages. We expect a pullback. So over here, it has already done this long move down, forming a wide state. So if we look at the distance from here to the blue line, it's quite a gap. And then we look at the distance from blue line to the red line, it's also quite a gap. So this is in the wide state. So if you got into a trade from this point on, let me take this out a bit. So over here, price got below the 200, it got below the 20 moving average. So at this point in time, what we are looking for is sell positions. We are looking for sell because it is in this bear markets. So what we look out for is an opportunity where we have a green candle being taken out by a purple candle, being engulfed by a purple candle. So this is the point where we have this green candle being taken out by this purple candle in a bear market. So once this happens, your entry goes in here, or you wait for this candle to close and then you get into the next candle, which is here. So if perhaps you entered on this earlier opportunity, this could be an area to add on to your position, as all these are near to the 20 moving average, making it a much higher probability trade to go into. So you take this trade here, your stop loss goes right above here. Guys, this is very important to enter a trade and put your stop loss above to protect your capital, because your capital is the only thing that keeps you in this game, and it's the only thing that will keep you in this game for a long time if you control your risks. If you lose consistently, that is what is going to keep you in this game for a long time. When I say losing consistently, what I mean by that is, for instance, this area, let's say from here, the back of my hand to where the stop here is 50 pounds. That is how much you are risking on this particular trade. And that amount should also be within your maximum loss per trade. So if it is 50 pounds you are prepared to lose on this particular trade, you keep it at that. So if, for instance, your maximum loss per trade is 150 pounds or dollars or whatever currency you might have, what you have to make sure is that that risk you are accepting is within that 150, not above it. So once it is within the 150 or below the 150, you are good to go. Not make sure you don't go above that maximum risk per trade. So me talking about you losing consistently. Losing consistently means you keeping your losses below that maximum loss per trade, no matter what trade you get in. So sometimes you may find that where you got your entry, you have a nice risk reward entry there. So you might not need the whole maximum loss per trade. You might just need £50 or £60 out of the 150 to protect yourself. I believe that is clear enough. So if you keep it at that you are not going above 150 no matter which trade you get in, that is what I mean by you losing consistently. It's not like you lose 150 today, tomorrow you lose 200, the next trade you lose 300, the next trade you take you lose 400. No, that is inconsistent. But I want it to be consistently. So it's either below 150 or at 150, the max. That's your max. But always make sure it's below 150. Doing it that way, you'll be in this game for a long time. You'll be in this game for a long time. So I believe this will be a light bulb moment, a aha moment for someone watching this video. So as I explained earlier on, this is another area you could take a position to add on to your trade. So all this happening, all this right down here, you would have enjoyed it. You came in at the right area. As I said earlier before, the narrow state is the best or the ideal area you could get an entry. So if you got in somewhere here, you would have been in this trade all the way down here. So as it gets to this wide, take your profit and get out. Take your profit and run. That is what I'll say. Take your profit and run. Because with this sharp move down, the reversal is most likely going to be sharp as well. So once you are in a trade like this and you get this wide run down, take your profits and run. Look for another opportunity. Look for another opportunity and then ride with it. Okay, so let's move on and see what we can find or what I can spot on the charts to give some explanation. So delete. Okay, so from this wide state, price pulled back close to the 200, pulled back to the was with the 20, so it came closer. If we compare the distance, from here to the 20 and then from here to the 200 as compared to distance where price is, or from here to 20 and then from here to 200, it's closer or it's nearer. So when you're taking a trade from here, you have a high chance of winning. So this happens to be still in the bear market. This move up would have been a counter trend trade. So price got back below the 20 moving average. It gave us an entry there, add on here, another add on here. So as I said, as it moves away from the 20, avoid taking more sells or more buys, because it's as it gets into the wide state, you take your profit and you run, because there's going to be a pullback or a move back to the narrow state, and that is what we will see happens again. Let's pull the chart and we'll see it. So from this wide state, it's pulled back here, forming a W pattern, a double bottom as we call it, forming a W, and then back to the narrow state. So at this narrow state, all we are looking for is, we don't worry ourselves so much what happens here. All we are looking for or doing is we are following the process. The process is, once price is above the 20 moving average, it's above the 200 moving average, the red line above the 50 moving average, you look out for buy opportunities. So here price pulled above and came back to the 20 moving average for a retest. It came back for a test, and this pullback here, that's what I also say you should do it with understanding. Doing it with understanding is this is what I mean by that. When you see that 20 moving average, the blue line has crossed above the 50 moving average, you expect a pullback to the 20 moving average or near it, or sometimes it will fall between the 20 and the 50, which also happens to be a good setup for you to take. So here, as price came back here, you could have hopped into this trade somewhere here. Your stop loss goes here. You hop into the trade, you add on, your stop loss goes here, the tip of this bar here. So you enter here. As this last purple candle got taken out by the green candle, you enter, your stop loss goes here. Another addition, you take your take the trade here, your stop loss goes here. So here I'm referring to the body of the candle, not so much of the wick. As the body got taken out, that's where I aim to add on. Alright, so I believe this is making sense. This is making sense, and I believe if you follow this, it will be a turn around in your trading career. There will be a turnaround in your trading career or journey, whatever you might call it. Yeah. So the same way we're talking, the same thing we're talking, I can show you examples over and over again. So on the 2-minute time frame, it's a shorter time frame. So kind of where you are day trading, so you want to see a more frequent occurrence of opportunities to get into a trade. So you are good to get on a smaller time frame to run through and then get some good setups. So this, as I was explaining to you again, another area of entry, a narrow state. From this narrow state, it went all the way to this wide state. So as I said, in the wide state you take your profit, or when it came to this first wide state, you could take your profits, you re-enter somewhere here, your stop loss go there, and then you run it to this point, you take your profit here. You take your profit here, and I believe this was so fast that you might have not even got the opportunity, but to get in. So one thing that I use to let me change this, take this back. Yeah, so as I said, I take my positions in the narrow states. As price moves on through the neutral states, I add on to my positions, and as it gets to the wide states, I take my profit. I close the trade, or I take part of it out and leave the remaining to run. So over here is another area you could have added on or taken a new position to run with it. So one thing that I use in taking my profit is The moment I spot a wide state and then I get price taking out the last green candle that is in an upward trend, I get the purple candle taken out or engulfing the last green candle, I take out my position. I close it. I close my position somewhere here or somewhere there before all this happens. If you perhaps you haven't set up a take profits and you are monitoring the trade, as this happens, you should be out. You should be out. So in reverse, is the same opportunities that you spot to enter a trade. If you are in one direction going up and then you spot an opportunity or a setup that gives you an opportunity to enter an opposite direction trade, take your profit and run. Take your profit and run. So here, price pulled down here with this force, got below the 20 moving average. So over here, you could have gotten into this trade, your stop loss going here. We can see that it went into a wide state. So from the wide state, we expect price to go back to the narrow state. So from this wide state, price just made a journey back to the narrow state. So in its movement back to the narrow state, you could run with it. Like here, we had a very nice move down. But that's what I was also telling you, that if the trend is very strong, you might not always have this kind of move down. You will have about 25, if it is strong trend going up, you will have about 25% retracement or pullback from its referring from its whole move up to the point that it goes to. You get about 20% or 25% or 50% max before it will push up again. So over here, it first of all did about 25% to this level and then went further down to 50% of this move up. So if we put a line in the middle here, this area happens to be 50% of this initial move up, and this area being about 25%. So most cases when the trend is strong, you will experience this, and then boom, it goes up again. This and then up again, as we can see here. Great. I hope this is making sense to you, and then you are getting some light bulb moments as I explain this to us. I explain this to you. Okay, let me move on. Let's see. So this is all what happened today. This is Bitcoin. This is all what happened today. So as it got to this new high, or the previous high position, as I explained it on the higher time frame earlier on. So let's put a line there. Let's see. Okay, crosshair. I'll use a crosshair. Where is it? Yeah. So where it got to is the $69,095 level. And this happened. This is the same area it got to in the past previously. So it came to test this area, and then off it went down. Off it went down. So that is what happened on Bitcoin at today. So as I've been explaining, so as it got to this wide state, Bitcoin has been on the move for a while. So today it's moved from this narrow state. So if you were watching your chart or you were trading, as it did this from this state, you were kind of getting ready. You were pumping up, revving, getting ready for a strike to the upside. So at this point, you don't really know which direction it could go. So all you are getting ready and getting prepared for is, if price gets above the 20 moving average, price is above the 200, then we are in an uptrend. Again, we are in an uptrend again. So from here, if you didn't get in at this level of the narrow state, you could get in over here as price pulled back to the 20 moving average and took out the last purple candle. You could have gotten into this trade, rode it all the way to this top, and probably if you wanted, you could close it from here, look for the next ride up. So after this point here, it did a sideways move until it started this move again. When we have this bottom, the what we call the pin bar, we had this pin bar here showing a rejection from this area. So when you spot this pin bar and the candle, the purple candle being taken out by this green candle, you could have hopped into this trade to the upside, your stop loss going down here below this pin bar, and then ride it all the way up here. So as I said again, as you got into this, once you enter this trade, because you don't want to give back what you have accumulated or your profit, so you enter this trade somewhere here, your stop loss goes here. This is your protection. This is the amount of money you are willing to risk on this trade. You are prepared to lose in case it doesn't go your way. So if you enter here, you put your stop loss here, and then you leave it to run. Let me use something else here. So you take your position here, you put your stop loss here, So as price gets above your entry level is this one. Your entry level is that one, and this is your stop loss. So as price moves above your entry, what you have to do, it gives you some space, like as price get to this level, because we have about 2 candles already printed here. So as price gets here, what you could do is pick your stop loss and place it above your entry, which is this pink line level. So here at this point on, you are in a risk-free trade. Should in case price decide to take back suddenly, it will kick you out from this. Once it gets to where this red line is, it will kick you out of the trade, and then by which time you would have already locked in the profit from where you entered the pink line to the red line. You would have secured that profit. So as price continues to push up, perhaps you could have continued to move it up to follow suit. So let's say you moved your stop loss, you have all this profit from this pink line to the red line you see here. So let's say, for instance, you weren't at your desk or you weren't monitoring your trade as this happened. So the moment price turned round like this with that force going down, you would have been kicked out of the trade from this level, you locking in this profit. So you would have made this profit from here to here, from here to here. Or if you were watching it and you saw this candle taking out this last green candle, you could have closed your trade as it got somewhere here. So your profit would have been from here to where this red line is. Great stuff. Yeah, so that is how I do it. That is how I trade the market. So I believe this video will serve as a vital information for you as you embark on this journey. Trading guys, trading is, it is simple. It is not rocket science. It is simple but not easy. It is simple but not easy. So all you have to do is to follow your process. Follow the process. Don't keep your mind on the money aspects. If you follow the process, you follow every step you have to follow. If price is below the 20 moving average, below the 200 moving average, you are looking for sales. You are ignoring the green candles forming on the charts, and then keeping your eye on the purple ones. As the purple candle takes out the green candle in a bear zone, in a bear market, you look for an entry and then you enter. The same way in a bull market or in an upward trend, you do the same thing. You do the same thing. So I'll quickly go through. So this is for day trading. If you want to make income daily, it's good to trade on a shorter time frame. If you want to make money, build it as wealth, then you are looking at trading on a higher time frame. That's what we call the swing trading. The swing trading. So let me get back on the chart and then I'll show you that. So I'll go on to the monthly again. So the monthly, this is where Bitcoin came to initially and then dropped back. So with this in place, this is a monthly chart. So for instance, this is where Bitcoin got started, all the way back in, okay, the information I have here is up to 2012. Yeah, so all the way back in 2012, this is where it started. Yeah, Bitcoin. So yeah, at this level where price was literally $200 or below, because when it started it was below that amount. Then it started pushing up. So if you had the chance to get into this trade from this narrow state, let me write on it again. So the same strategy I'm talking about, it also applies on the higher time frame. This is a monthly chart, guys. This is a monthly chart, and this is the narrow state that I'm referring to. Again, you can't find the 200 moving average here, because from when Bitcoin started back in 2012, 2013, when it first came on, this chart doesn't have enough information or enough data to calculate the 200 moving average. That is why we can't see it here. But it's got enough information to calculate the 50 moving average and the 20 moving average. So in the averages, it's kind of to calculate this moving average, it takes, for instance, the 20 moving average, it takes the last 20 candles in the past and then use it to calculate the average. That is why we can see the plot there, the 20 moving average plot there, the same as the 50 moving average, which is the more of a mid-term moving average. So it's also calculated based on the 50 candles in the past, previous 50 candles. Then to use it to calculate the moving average and then project it. So over here we don't see the 200 because there's not enough data on the monthly to calculate 200 months. We are on the monthly charts, so there's not enough data to calculate it using 200 months to plot the 200 moving average on there. So with that said, that's fine. We can still spot the state we are in here. We are in a narrow state where we can see the 50, the price, the green and purple bars together with the 20 moving average. So this is in the narrow state. So if, for instance, we got in somewhere here when price was just 7,000, 6,000, or better still when it was around 3,000, see the amount of money you would have made all the way to the top, all the way to this high, all the way to this high, or from the narrow states. So from the narrow states it got to the wide states. So from the wide state where it got to the blue line, you can see the gap, and then the red line, which is the 200, will be somewhere here. So from here to here to is a gap. So this represents the wide states. So once price gets to the wide states, it will surely come back to the narrow states. So this is where we are currently today. It's gotten the same area of wide states or wideness that it's turned around and put all the way to this low, but we are not anticipating a turn around like this to this low, as it is in an upward trend. It could pull back close to the 20 moving average and the 50, and then push up again, because it is a rising market. It is a rising market. So once it's rising, you don't expect too much. The same way I was explaining earlier on about 20% and 50% expectation. 25% retracement and back, or 50% retracement and then back. So over here it got to the wide states, left these wicks here, pulled back to this level, pushed back to the wide state again, and then back to the narrow state, and then gave us another ride up. So the whole of last month, look at the push up. That was a quite significant push up. And then this month, as we're in a new month, it came back to test this previous high. So from this point on, there's a high chance. So what we could look out for if you are going to trade as a swing trader, if we see this candle, if this happens to be the last green candle here, and we get a purple candle, let's draw something. We get a purple candle. We get a purple candle coming here, taking this green candle out. We could go in for a sell here. As this green candle gets taken out, we could go in for a sell here. That is on a swing trade, but nevertheless, as I said, this is an upward trend, so you don't look too much of, you don't expect too much, because anything can happen. It could be that there will be a small pullback, and then a small pullback, and then continue going up. A small pullback and continue going up. So you trade what you see. And then avoid trading your mind, your thoughts. Avoid trading your beliefs. Avoid trading how you feel. You replace all those things with You place all those things with your process, and your process should be your trading plan. Your process should be your trading plan. So that means you have to have a trading plan in place. If you are going on this journey, you have to have a trading plan in place and follow what it says in the trading plan. So whatever you trade in, you are trading it according to what the trading plan is, until it becomes part and parcel of you, until it becomes second nature to you. Until it becomes second nature to you. So the same way we take up the task of driving. When you are driving, when you start driving, it becomes so cumbersome. It becomes so complicated. But as you get to know what you are doing, it becomes part and parcel of you. It becomes a second nature to you, that you don't even have to think of what you are doing. It's the same way, if you keep on following your process, following your plan, you now become the plan that you are implementing in the markets. You become the plan itself. It will no longer be a sheet of paper with some written information on it, because you have done it so much, or you have repeated it so much, that you have now become the plan. So at that instant, at that point on, you might not even need to look through your trading plan. Before you get to that level, you have to go through it step by step, taking notes, writing down your journals, and then each trade you take, putting down your journals, and following it as to the letter. So this is a weekly chart. So the same way that we're talking about on the weekly chart, this is a narrow state. This is a narrow state. So we know from the narrow states we move to the wide states. So all we look out for when we are in the narrow state, we identify first which state we are in. That will determine which direction we're going to be trading on to. So we are in the narrow state from here on, and then price got above the 20 moving average. So once this happens, we are expecting that we're going to look out, or we are expecting to buy. So just as I explained to you earlier on, we can see the 20 moving average crossing above the 50 moving average. And once we see this happening, the next thing we are expecting is a pullback to the 20 moving average. And that is what exactly happened here. This is on the weekly time frame, guys. This is on the weekly time frame. So if you want to swing it, you get into this trade the moment this last purple candle gets taken out by the green candle. So you will be in this trade right from the beginning. If you are using this, you'll be in this trade right from the beginning here. Your stop loss goes below this area you entered. This is how much you are risking. This is weekly. So each bar you see here took a whole week to print it. These tiny ones you see here took a whole week to print it. The same way this big one you can see took a whole week to print. So if you had gotten into this trade at this narrow state, you would have been in profit all the way from here, from this low to the wide states. All the way from here to the wide states. Guys, this strategy is simple and so powerful. Simple and so powerful. So as it made its way up, you could have added another position as price took out this purple candle here. So you could have added another position there. Your stop loss goes in here. So once price moves in your direction to the upside, you move your stop loss above your entry. The same thing here, you move your stop loss, you place below here above your entry. So you could be trailing your profits as it continues to move up. So this is what went on for weeks, for months. So you entering here, you would have gone with it for months before it got to this point and then started coming down. So no matter what the symbol you want to trade on, this applies to any symbol, any time frame you want to be taking. This applies to any time frame and symbol you want to be on. So guys, I don't want to take this too long. I've already done an hour. So thank you for watching this, and I believe this will be a great help with your trading journey. So all I will say is enjoy it. Just click the like button and then subscribe to the channel, so anytime I put up a new video you'll be notified, and then for you to get onto it to have the experience as well, the experience of getting the information and applying them. Thank you so much, and then catch you up later.